Hey traders, John Fortune here with this week's weekly Forex forecast. Hope everybody's had a fantastic weekend. We did have some news out of Russia of a power struggle taking place. How that develops is very, very hard to know. It's very early. And if it actually comes to anything remains to be seen. However, we did get a spike at the end of the week in the dollar. And it does look like coming into the open on Monday, these events in Russia are going to have ramifications on the market. So keep an eye out for that next week, but we're going to be trading the same systematic process here as always. Okay, so let's have a quick look at the economic calendar. We did have Powell testifying last week. Didn't really say anything over and above what he said at FOMC. The big takeaway from last week we need to pay attention to was the unexpected quote-unquote rate hike out of the Bank of England. They hiked higher than expected. And also we had this rate hike out of, you can see it was consensus, but we had this rate hike out of Switzerland as well. And this is important going into this week because it does set up some follow through in those pairs, relatively speaking. We do, as I said, have a bit of a curveball with the information out of Russia just yesterday. So there hasn't been too much time to really process this or have a look at the consequences on the market or the market impact. But what this does set up, at least on a relative basis, is the pound and the Swiss franc to the long side next week, which is something we're going to be looking for in today's video. And finally, just a quick look at the data coming up this week. We don't really have anything. We have Aussie CPI. Apart from that, we've got some speeches. This is set up by the ECB here. And apart from that, we really don't have anything else. We do have final GDP coming out of the US on Thursday. And this is very, very interesting because what we saw last week was initial claims coming out, unemployment claims. You can see 264. This was last week's one. This was the previous one, comes out weekly. And this was a continuation of the trend to the upside. And I posted previously to say on Twitter that the trend was for recessionary readings in the unemployment claims likely heading into Q3, Q4 of this year. And last week, we can also see that the US Conference Board, with their quite well-known leading economic indicators, have predicted the US economy to fall into recession this coming quarter, which of course starts next month. And if that is the case, and the US is going to tip into recession in the coming month over the next few quarters into 2024, I am looking to see if that recessionary regime does start to materialize, in the coming weeks in markets. Okay, so let's have a quick look at the scores for the coming week. And the first thing to take note of is the big reversal in the probabilities, the rolling probabilities of the Australian dollar. And the scorecards now are projecting this as an underperformance. And look at the momentum we've got to the downside. Although the Japanese yen is actually scoring as a better short and has been a fantastic short and actually has been the better short, I do think next week Aussie shorts could even be the best. Why? Because maybe the yen pairs need to pause or correct a little bit first. Very often when you get very good moves or very strong moves, you do need to correct or pause for a bit as well. So maybe we get, there's a risk we get a little bit of a pause in the yen pairs next week, although I'm still looking to be short. In fact, it's my top short. But I think maybe the Aussie pairs could actually even perform to the downside next week. So I am going to focus on yen shorts once again, which have paid very nicely for anyone who's been involved or trading that over the last few weeks. Since that BOJ meeting, in fact, when they came out and reaffirmed their commitment to the yield curve control program. And I said to you in that following weekly Forex forecast, this is likely going to see the yen back down to its lows. So I do like yen shorts and Aussie shorts as the main theme next week. We're also going to be looking at the dollar. Now, the dollar, and this is where we get a bit of a curveball, the dollar is still bearish, but it is less bearish than it was before. And with the information coming out of the power struggle in Russia, I do question, because we saw a rally in the dollar on Friday, and I do question whether that was a taste of things to come if there is going to be a much bigger catalyst from this power struggle in Russia. Because if we're going to see a supply shock similar to what we saw, with the invasion of Ukraine previously. And of course, they're not the same situation. There's a lot of moving parts and there's a lot of unknowns and different variables in this. But if the risk is for a supply shock, maybe nat gas higher, crude oil higher, that would of course be bullish for the dollar. It would actually push that kind of re-acceleration of inflation on the supply side. Now, of course, the big problem hasn't been the supply side of inflation, it's been the demand side. So that's where the real problem has been. But I question whether we're going to get a little bit of a supply shock out of this again. So going into next week, very simply put, I do like pound and Swiss franc longs, and also Canadian dollar longs we can look at, especially versus the Japanese yen and primarily the Aussie dollar. We're going to be looking at the US dollar, but what I'm going to do, because of this information coming out of Russia, because this could act as a bullish catalyst, I am going to look at US dollar short position versus the pound. If you're going to short the dollar, I would do it against the best scoring currency. But we're also going to look at the potential to trade the dollar both ways next week. Be reactive to the market impact of this news coming out, on Friday and now over the weekend. And so a bit like an interest rate decision, I am going to be prepared to play the dollar both ways. Okay, so let's have a look at the individual currencies, starting with the dollar. Now, my bias is for a follow through of this rally we saw. We've seen the dollar bottoming in the scorecards, at least temporarily. And we've seen the impact on Friday when, of course, this was materializing. And it does sound like there was maybe a little bit of forward knowledge here by some people. But we saw this spike in the dollar, and I wouldn't be surprised if that was linked to what's unfolding in Russia currently. Now, if this continues into next week as a catalyst, then what we're going to see is we're going to see the dollar having double bottomed, technically, broken out of this over here on the right bottom of the double bottom, a smaller head and shoulders or inverse head and shoulders breakout. Here's your head, shoulder, shoulder. We break out with momentum, we pull back and retest it. And then what we've seen, I'm not going to draw across this because I want to show you, we've seen another mini double bottom here with a break on that momentum drive higher. So if this follows through with another update on Monday, as I think could be the case, this could very well kickstart the break above this high, and not just onto here, but that high over here itself would be, a break of this would be a confirmation of the double bottom, and you would expect at least a 1-to-1 ratio of this move from the low to here, if this is going to play out, up into this area as well. And that is the catalyst that could actually push the dollar higher. Again, it's not bullish in the scorecards as it currently stands, but we have to take into account this potential catalyst, which can see the dollar pushing higher into next week. So if this is the case, the question is, is the development in Russia enough to actually cause a big rally in the dollar, or is this going to kickstart the dollar move higher? And then as the recessionary regime takes over, if the US Conference Board is correct, as we head into next quarter and the US slips into recession over the next 3 quarters, that is what could actually be the real driver, not the developments in Russia that could cause the near-term pop, but it could be the real driver of the dollar move back towards the highs, as I've been looking for since the beginning of this year, really, and we've been pulling back in this area. Next is the euro, and we kind of have the inverse here. You can see we came up and tested the high over here. This is absolutely a textbook head and shoulders, because we tested the left shoulder here and formed the right shoulder, and we started to sell off. So again, if we do sell off here and we come down and break this level, this is where, and this is a chart that I really like here, it's more intuitive than even the dollar index we just looked at, and I'll tell you why. Because it's essentially just the inverse of what we're looking at in the dollar. But if you look at this to the downside, not only do we have a potential developing head and shoulders, it would be confirmed on a break below this low. That's where this head and shoulders, so you've got a shoulder, you've got a higher head, and then the shoulder over here. That's where that would be confirmed. At the moment it's developing. Why? Because we have a reversal on the right shoulder, but it's not yet confirmed. But there's 2 things here. There's 2 sets of traders that would be liquidating long positions below this low. First and foremost, those who see this as a head and shoulders reversal. You would then have potentially sellers stepping in at this point, but also the traders that bought the euro as it pulled back into the major breakout level of the 1.06710. Many of them are likely going to have stop losses, whether it's mental or hard stop losses under here. And if we do get this break, this is where you can actually catalyze a much bigger move down. And that would be the major pivot point, which could start the trend back down to the lows, which, as you all know, for those who've been following the weekly Forex forecast, is something I've been looking for to happen this year, and in the back end of this year, I do think this is a likely scenario. Next is the pound. Now the pound itself did get that bullish catalyst last week. If we do get a stronger dollar, this is going to weigh on the pound. Even if the pound does pull back and we start to come down lower, I do think on a relative basis, the pound is still likely to outperform certainly the Australian dollar and also the yen. So I do like pound yen and pound Aussie to the upside next week, even if we get a stronger dollar and as a result, the pound just consolidating or pulling back a bit. Next is the Swiss franc. Now the Swiss franc has been on my long radar since the beginning of the year. I actually posted out on the 1st of January. I do think we're down towards this area over here. I do think the Swiss franc is coming up to the 117 area. We are making our way, and we have been making our way, and in fact I still have a longer term Swiss franc long position versus the Australian dollar, which actually is highlighted as a good market next week. But this market now breaking out and increasing its score in the scorecards does set up, you can see this consolidation, does set up a move next week. So I do really like Swiss franc longs next week, especially versus the Aussie and especially versus the Japanese yen. Next is the yen. The yen has been my favorite short for a while now, like I said, since the BOJ meeting when they reaffirmed their commitment to the yield curve control program. And I did say to you, I believe this is coming down to its lows. And the scorecards have been projecting a major underperformance of the Japanese yen. And the rolling probabilities are absolutely down at -4. This is essentially oversold. However, it's not oversold in the sense you want to start buying it. This is oversold in the sense that something can stay oversold for a long period of time. So I do favor, you can see we've broken out this consolidation. I do favor yen shorts once again. Any pullback is simply an opportunity, in my opinion, to short yen once again until or unless we get down to this low. Then we may start to see things change from the BOJ. We'll have to pay attention. But as it currently stands, look for this move down to the lows with the opportunity to short along the way. Next is the CAD. The CAD has broken out of this high, and I do think at some point we see this roll over and fail. However, relatively speaking, I do like the Canadian dollar. I think we're coming back down to this low, as I've said to you guys before in these videos. But I do like the Canadian dollar relatively. So even if we start to pull back and maybe, again, we need to see how this information coming out is going to affect crude oil, for example. If we get a spike in crude oil, this is going to benefit the Canadian dollar. And vis-a-vis the yen and the Aussie, I do think we could see a good performance of the Canadian dollar. Next is Aussie dollar. Big sell-off last week, and I do like Aussie dollar shorts as one of the best opportunities next week. I have been saying I do think Aussie dollar is coming down to here. We did break out down here, and we immediately reversed. And this is, as I said to you guys previously, the worst pattern you can find in any market, which is this kind of expanded triangle where we make new highs, new lows, and then new high, and then new low, and then new high, new low. And I don't know actually from memory an expanded triangle which has even gone on this long that I can remember. But that is the pattern we've had, but I do favor shorts, and I do think we're going back down to the lows. So keep an eye on Aussie shorts next week, especially versus the franc, the CAD, and also the pound. And last but not least, the New Zealand dollar. We have broken down with momentum, and I am looking for this to continue lower. So relatively speaking, I think there are better shorts next week. I've been saying to you guys all year, I do think eventually we find our way down to here, most likely in a recessionary environment or regime. And of course, you see commodity currencies underperforming and the dollar rallying back towards its highs in a recessionary environment. That is what I've been saying since the beginning of the year. And if, as I said, the conference board is right, that would be the catalyst. As the US slips into recession, it's going to take the rest of the world with it, because that's how the global economy works. So keep an eye out for this. In and of itself, I still favor shorts down to this low, but I do think there are better shorts for short-term trading next week. Okay, so let's have a look at the markets themselves, starting with crude oil. So crude oil did come down, take out the max profit taking zone last week, and you can see that held crude oil last week. That was absolutely where, if you were short, and I was only looking for shorts in crude oil, I have been recently in these videos, that was where you could have booked your profits for pretty much a maximum return in this area. Coming to this week, I don't really like crude oil shorts as much because of the ongoing situation in Russia. Of course, you may say, but John, nothing has necessarily restricted the supply of crude oil, causing the price to go higher. That is true, based on what's happened so far, and maybe that doesn't happen. But we can also see crude oil rally just purely on speculation of that potentially happening. So it does provide some upside risk to crude oil next week. On balance, if I am going to be looking for shorts, I'd probably like to look for shorts in the 73 area. And that would probably be, after a couple of days have passed, maybe later on in the week next week, once we start to see what the situation actually is in Russia. So all in all, I would still on balance be short, but because of the risk of an upside surprise in crude oil based on the Russian catalyst, I don't think it's a fantastic market next week. I think there are better markets to trade next week. So the first Forex pair is pound yen. We've started to break out of this consolidation. So any pullback in this market, I am looking at potential long opportunities into the max profit taking zone of the 18550 area. Next is CAD yen. Now this market traded to the upside as we were looking at in the previous video, and it traded right into the 109.30 area that we were looking for. Sorry, the 109.03, not 30, 0.03 area. And you can see again, that was the area, the max profit taking zone, where if you'd got long during the week, that was a great place to be booking profits on any short-term long trades in CAD yen. Coming into this week, I do favor longs once again, so any pullback or consolidation is viewed as the opportunity. I don't like to buy at the high. Any pullback will be the opportunity to look for longs into the 110.75 area. And my third favorite yen pair is franc yen. Also a market highlighted to the upside in the last week's video, and you can see we came very, very close to the max profit taking zone, just missed it. Coming into this week, any pullback like over here is viewed as the opportunity to look for bullish setups in franc yen into the 162.50 area. Next is pound Aussie. I do think there's a very good chance we come up and test this high and then into the 1.9250 area. We've got momentum. You can see there's kind of this megaphone pattern, but we did break with momentum. So now any pullback, maybe a stair step into this area, is viewed as an opportunity to start to look for bullish setups in this market into the 1.9250 area. Next is Aussie CAD. Very, very, very strong sell-off. And if we do get that bullish catalyst in crude oil, instead of going and shorting crude oil, just leave crude oil and look for that derivative trade where we've got the Canadian dollar in the upper half of the scorecard showing good relative overperformance, projected overperformance in the Canadian dollar. And if you can get a bullish catalyst from the Russia scenario, that is going to also support an already projected to be strong Canadian dollar. So any pullback in this market next week is simply viewed as an opportunity to look for shorts down to the 0.870 area. And the final Aussie pair I like next week is Aussie franc. We had this head and shoulders reversal. You can see we consolidated and then we broke out with momentum. We're selling off. So any pullback, any flag in this area is viewed next week as a very good opportunity to start to look for bearish setups down to the 0.5900 area. And I do think we're coming back down to test the lows in Aussie franc in the near future. Okay, so we're going to finish the Forex complex here with the dollar pairs. We always look at euro dollar. Now, because the dollar has bottomed in the scorecards, although it's still bearish to neutral, it has bottomed, and I'm trading this almost as next week, or anticipating a trade like an interest rate decision where we have a catalyst and then we get the follow through. And if what we saw on Friday is a taste of what's to come heading into next week, then I would favor, relative to some of these other currencies, I would favor dollar strength, even though it's -1 in the scorecards. Now, euro dollar, the euro is not necessarily a currency I would want to trade it against. We look at this market every single week. So on balance, what I'm looking for is this initial move down, any pullback in this area for potential short into the 1.0780 area. But just bear in mind, if you are going to trade dollar strength next week, or you want to take that risk as a follow-through trade almost to this catalyst we saw on Friday, namely the disruptions in Russia, then I would prefer to look at US dollar yen to the upside and Aussie dollar to the downside. In other words, go long the dollar versus currencies which are projected to underperform it in the scorecards, not currencies which are projected to outperform it. So with that said, although these 6 markets here are my favorite heading into next week, I am also going to be looking at a couple of dollar long plays. Any pullback in US dollar yen is viewed as the opportunity, once again, similar to over here, to look for a bullish breakout or bullish setups into the 145.50 area. Next is Aussie dollar. Now the technicals on this is pretty horrible because again, it's just that expanded pattern. However, we have had a nice sell-off with momentum here, and any pullback in this area is viewed as the opportunity to look for bearish setups, bearish breakouts, start to reverse, double tops, head and shoulders, down to the 0.65750 area. And last but not least, we have pound dollar. Now, pound dollar is the kind of reverse play here. I did say at the beginning of the video, I'd be looking at setups where we could play dollar both ways. I am preferring, because of the combination of the dollar bottoming in the scorecards, although it's not very bullish right now, and this catalyst out of Russia with this kind of flight to safety, or maybe it's even more of a recession trade, this idea that we see a follow through of strength in the dollar next week. If that fails to materialize, if we start to see, a little bit at the beginning of the week and then it reverses, you can come and look for dollar shorts into the high over here in pound dollar. Only pound dollar to the upside really would I be interested in, because the pound is projected to be the best currency to the long side heading into next week. Okay, so wrapping up the video with gold, silver, and Bitcoin, starting with the gold-silver ratio, you can see we are breaking out into even a potential third wave here, because we have this failure to make a low, got this double bottom, then we break with momentum, we pull back, failure to make a low. And remember this pattern, because as we break this high and we get momentum to the upside, what does this look like? Very much, if you go back and look at the dollar index chart, very similar. We had that reversal pattern with the first push higher, and we're right down here. And if you remember in the dollar, we did a little double bottom and we've just started to break here. So this is what I'm potentially looking for in the dollar, especially if we get follow through from the catalyst over the weekend. So I do favor gold to the long side over silver, and this is something you would also expect to see in a more recessionary or risk-off environment, gold outperforming silver. So it does beg the question, if we are going to see a break higher, is this, well, this would be one of those signals that actually we're turning a bit more risk-off overall. But because of the dollar strength idea that I'm looking at, or theme heading into next week, I favor both gold and silver to the short side. And it's silver, based on what we're looking at here in the gold-silver ratio, that I prefer out of the two. If we're going to short one of these next week, I'd prefer to short silver. Next is gold. Ever since failing at the major breakout, we've just started to reverse and we are grinding lower. And as you can see, although we are moving lower, gold relatively in and of itself is doing quite well, especially relative to silver. So yes, any pullback in this market, I would favor shorts, but I don't think it's a fantastic trade next week. I think there are better markets, and I do prefer silver, as I said, to the downside. Next is silver. Now look at the momentum we have here with silver. Here was the major double top reversal that we were looking at. We pulled back and tested the underside of it, and now we've started to break down. This is quite significant. This is where you see strong moves to the downside, because we pulled back, we failed at the pattern breakout, and now we're breaking lower again. You're going to see liquidation here. This is also suggestive of further upside in the dollar. So going into next week, any pullback in this market, this is a market I like to the downside. Any flag should be viewed as an opportunity to look for shorts into the 2150. But if we are heading into a recession in the US over the next 3 quarters, if the US Conference Board is right, then this could be heading much lower than just the 2150. But next week, short-term trades into the 2150 I'm looking for. And last but not least, we have Bitcoin. Now, Bitcoin rallied through the max profit taking zone to the upside last week. And in a recessionary environment, I would expect Bitcoin to seriously underperform. However, we're actually seeing Bitcoin do quite well. And it's very, very interesting that we are starting to see this. We are seeing Bitcoin kind of catch up that correlation I spoke about in previous videos with the NASDAQ and starting to break down. But I do think on balance, if we do head into a recession in the US and globally over the next, let's say Q3, maybe even it starts Q4, maybe the conference board a bit early, then Bitcoin would see downward pressure. However, as it currently stands, with this momentum going into next week, I would, on balance, favor longs in Bitcoin once again up to the 33,000 area. Again, though, I think there are better markets next week. This is not one of my favorite markets to be trading next week. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.